Hello viewers, how are you? My dear Forex traders, I have given some analysis on 29th October, and so far this was the chart I had presented. At the time there was no existence of this particular candle. This was not present that day. These things were not present. This area was not present. This, especially these two candles. So if I see the chart here, I told that the price will come down here. So let's increase a little, and it came down from here to here. If you can see, it came down here. However, it didn't make any test. It didn't make any test, and it started rising from here the whole day. And if you see, it rose, it break off here. This was the barrier, which was very important. And once it has been broken, it started going up. And here it's supposed to do another test, but it failed also. I beg your pardon, it didn't do the test. It also broke this weekly top. This zone is basically daily, but there is a weekly top was this one before. Now, as per our prediction, I told you that it will come here to the test. Test has not been done, and it has gone to there, or it is heading. Now it will do a test here, and we can now today we can see a red candle, so it may test here. And if this retest fails and go above this line, then where it should go, we are going to visualize that. So in daytime, if we can see very clearly that this is the range of the day where it made a double bottom here in day. This was the place. Let me remove some of the things so the chart remains a little bit clean, and we can move forward with a better perspective and concentrating what can be done on where the market can do, or where the market can go. So initially this was the double bottom in the day. Let me write a few. Some of the traders were complaining they are lost in translation, which color represents what. So this is daily bottom, and this daily bottom here, let me mark it properly, it should be in blue. So this daily bottom here was created. Let me make it a little bit small, because the implication is not that much big here anymore. Okay, let's go to daily time frame. So this one, it has been completely right now out of our probabilistic trade, but I will make some interpretation here too. So this daily bottom was the reason which created this top initially. This has been created from this place. This was the place. Let us mark this. This was the place for which for which this top created earlier, this one, and this top was created. Later it started coming down. So my way of thinking was it will come here, then try to go up and retest again this zone, but it didn't retest. If we bring it back, let me, anyhow, so I beg your pardon for my inefficient operation or presentation, sorry for that. So this was the thing. So without any retest, it broke this line, then it broke this zone also, this weekly daily top. And if we go to weekly, we can see that there is a weekly zone also here. This was the weekly top at the same time, double top in the weekly. It formed a double top with this red candle. So it has broken that one also, and that is marked by this this line. So coming back today, time frame. So it broke this barrier, it broke this barrier, and it is now heading towards this much. Now after today, I mean yesterday on Tuesday, after the closing of the Tuesday candle, this big outside candle, this big green one, has been formed as it has been explained here. You can see yen slides after minor BOJ policy tweak, stock gain, yen slides after minor BOJ policy tweak, stock advance, Japan yen sinks broadly as BOJ policy adjusts seem inadequate. And if we keep on reading, you can see Japanese yen sinks towards 33 years low. So here we need to understand, if it is 33 years low, I mean the dollar yen is reaching somewhere which is very much an uncharted territory. We have never been in last 33 years. So my way of thinking what to do, where how far it will go. So if we try to visualize it, we can see this as a market structure rule of thumb. This was the bottom of the daily double bottom, and this was the double top initially. Okay, so it is 352 pips. Considering this 352 pips, if we see now how long it will go, we can measure that in simple form, that from this line to this line, this is the range the market should at least or will react, not at least, will react. From where? From here. And if you see this red line, this was the last seen highest. If we go to month, this red line will represent that this is the highest we have gone before in this zone. Now it is trying to break that, and the highest mark, if we see that it can reach up to, we don't know, 357, maybe 257, but in last 33 years the price has never came here before this zone. You see, 1989, or let's say this zone is working on 90. So it is 33 years already. So let's get back to our analysis. Let's see what we can visualize, at least to prepare for or face it, or if we can generate any higher probability trade here, buy or sell, that can help us. So the market will go from here, this place, this top, up to 352 pips, which can reach up to 154.46. So this has become invalid now. This will go, we'll put it here, and this was, if we measure half of it, maybe the market will at least come, or may come to this position. And if we measure, this is a big range, 352 pips. So if we divide it with a little bit more, this one, put it the 50% of the 50% of the total 50%, we can see that it has already achieved the first 25% of this whole thing. Let me put it in different color, so we do understand what we are doing. No, not like that. Let's put it black, but this inside this we put yellow. So this is 25%, and this is 50% of the total 352 pips. So it has already achieved 25% of 352 pips, the range from here to here. And you can see now that it is showing some negative attitude here. We can see a red one, but I have doubt on this red one because it's supposed to go to at least to 50%. Now coming back here, you can see the last time the price came here was on October 22, Friday, October 22, and it didn't remain here for a long time. But in this case, it is holding up. The reason that the current interest rate of Bank of Japan is negative 0.10. It means if you deposit 100 yen in any Bank of Japan, they will pay you back 99.90 yen after 1 year. They will deduct, they will not provide you any profit on your deposit. On the contrary, we know that the FOMC, the US Federal Open Market Committee, chaired by Jeremy Powell, he decides the rate of USA. And so far, the US rate of interest is 5.5%, and there is a good chance, as per the analysts, that on Thursday this week, I mean today is Wednesday at the moment, so Wednesday and Thursday, you can see almost in Thursday, early in the morning from my time zone, and the Federal Reserve rate will be declared again. So if it remains same, as per the analyst, they are expecting an increase of 0.25 points. So the interest rate will become 5.75%. And if it is so, then I am more than sure that it will break these things. It will break down. This will move upward from here if interest rate is raised. So maybe it will make some test, something like this, then it will move up. It will do a little test, and then it will move up here in 75 and then upward. And after it reaches this point, then it may open some new avenues on upside, or may started creating some resistance here. I don't know, but once the market unfold after the US data and US interest rate, maybe we will see something here. But so far, the Bank of Japan is not interested to intervene the market at all. They are allowing yen, Japanese yen, for free fall, and we are seeing this, watching this. This is number one, and here, if the interest not is increased by Jeremy Powell, the Honorable Chairman of Federal Open Market Committee, then we may have some implication. This curve, what we have said that it will retest and will go there and it will retest and come back. This implication we have to see in scenario. In that case, let me delete this. We don't want this right now. So maybe up to Thursday, before the rate declaration of US Federal Bank, maybe it will be able to reach here. This point it will come. At least this point, up to this point it will come. And after reaching here, the implication, if the interest rate remains same, then maybe there is a chance that it will come down, it will retest, it will come down, it will retest, and it will come down, it will retest, and it will come down, it will retest, it will come down. Now question is, why I always try to say the retest. Retest is the harmony of market, because if the market doesn't work exactly this rhythm, but we can see the market does work like this. Let me concise it a little. If we do the same thing here, market works in this way. It will do. It is the way the market works. It will do things this way. That is the nature of the market. You understand? That's why I always put that in perspective, so things we can understand. But it is not necessary. I repeat it, it is not necessary that every barrier it will retest. But it will show some price reaction, believe me. I have no doubt about it. It will show some sort of price reaction. Now, if the rate remains same, we can see that there is a big area here. Do you see? Until today and tomorrow's candle, we don't know. Maybe tomorrow candle, today's candle, today's Wednesday's candle. We don't know. Here we have a very big fair value gap. This area, you can see this one, from here to here, until this red candle gets bigger and push the price down and adjust some of the fair value gap. Market will never allow imperfection. Market will never imperfection. The way it has been here, fair value gap, and you see the price went up, it covered the whole fair value gap of this candle, this particular candle. Let me zoom it a little bit more so you understand what I am talking. This is the unaddressed fair value gap left when the market went up here. But ultimately the market came down to mitigate this fair value gap. Can you see? Through this candle, it has been made. So this is a very outside candle, which is 3 times of this candle, or 2.5 times of this candle, and it left a very big fair value gap. A lot of buyer and sellers activity couldn't participate here. They failed. They don't have the time. It just keep on pushing. They didn't have the time. So this fair value gap needs to be mitigated, And another thing is this, here is a big fair value gap at the same time. None has mitigated, I beg your pardon, not this one, this one. Here it has not been addressed yet. The way it has been addressed here, but this has not been. Same thing we can see that here fair value gap has been left. A lot in day time frame, a lot of fair value gap on the downside. It is not essential that it has to meet the fair value gap. It is not essential, but the market does not allow imperfection, imbalance. So best option is to wait right now, as it has achieved 25% of our total targeted 352 pips, which we have measured from this daily double bottom. I should put it double bottom, I beg your pardon for that. Double bottom, and this double top we measured, and it is just it will go up to this is the, and once it reaches, it has different implication. Once it reaches here, it has different implication. So until the price goes there, we cannot say anything very exactly how the things will turn, because we have to go on the left to see what happened in this zone, how the price has reacted, etc., etc., etc. So so far it has covered 25% of the first break. This was the break from here. It has broken out, and it is 25%. Now today's candle we will see in day time frame, or maybe 4 hours time frame. And if we see the yesterday, the last 4 hour, it tried to retrace and adjusted the fair value gap here of this candle, but the price has been pushed back again to its original 25% gain. Now again we are seeing a red candle, so I don't know, maybe it will try to retest like this, coming back here, and on a little bit above, or it will go up. And on the other scenario, if the price fails to overcome this portion, I beg your pardon, if the price fail this line, this 25%, then there is a chance that it will retest here too. It may. There is every possibility. It will do what? Let me show you. Maybe it will, here, this thing I am showing here. So it will be something like this, down and go up. Then it will join this curve, and it will do the same thing again and again. And there will be a maybe there will be a red candle. Here we will find a red candle, then a green candle to retest the 25% barrier here again. And if it breaks out, it will go like this. If it fails, then we have a scenario here. And here, after reaching the 50%, maybe it will retest. So we don't know. So we are in a very typical position, or the price is currently in a typical area. And if we try to see the volume now, let's see if we try to see the volume. Let's see the volume at this level. Let's not find the volume in this level. Let us, from the last double top, if we see and increase it, you can see the prices. There is no volume here. Can you see, guys? There is no significant volume here. No volume. All these price are the price has gone up, but the participation of buyer and seller is very much less. So I have doubt, of course I do, as we are not getting any volume, that price will sustain here, or price will sustain here. as there is no volume. You can see if there was huge volume, a big volume here, then we have a chance that that volume defines the activity of buyers and seller, how much they are interested in that particular price. So in this price, the volume is very less participant up from the market, but here is the actual volume in the total range. Can you see? This is so. Please mark this 149.85 is a very major volume area, which I have marked a little bit higher, and it's okay. So this candle, here is the major volume. This guy, this is the bar we can see. So if price fails this 25% mark, then I think it has to come here at least 149.70 at least to activate the to increase the activity of the buyer and seller. I hope that is all for today. If you have any question, comments, and if you have a better analysis, I would love to learn from you guys too. Thank you very much. Happy trading.